Today is Thursday, March 24th. I want to take a look at the utilities sector today because it's a big thought that if stocks are going up, that bonds, especially Treasury bonds, should be heading lower, and they did head lower for the last month or so. But if you look at utilities, they really haven't gone lower. They've been trending higher, and you can see here the utilities ETF, the SPDR Utilities ETF. And it's getting close to its 2015 high, which was an all-time high. Dow Jones Utility Average has already eclipsed its previous all-time high, although not by much. But the point to make here is that, look at this trend. A sideways move at the end of last year and a rally. So it's hard to say that there's anything wrong with the sector right now. You could argue possibly overbought, possibly coming into resistance, and that's all true. But take a look at some of the indicators. On balance volume, it was flat during the choppy period, of course, although you could see a slight increase here. And then it just took off again as the rally came in. So investors are certainly piling into this thing. Chaikin money flow, I have it just there as a foil for on balance volume just to see if it agrees. And it does, just above the zero line. It's pretty high, so that's good. And price relative, this is the ETF versus the SPY, or basically utilities versus the market. And the stocks have rallied this month, but utilities have rallied with them, so the performance is flat, but overall you could see they're just beating the market. So with that in mind, I just want to take a look at one stock which might be something to consider. This is OGE Energy, possibly an old Oklahoma Gas and Electric, but is based in Oklahoma. What I like to do is find sectors that are strong, and then rather than buy the strongest and the strongest, I want to buy stocks that are just emerging, ready to play catch up in a strong sector. So you have to have the strong sector for sure, but now I want a stock that's low, but it's already proven that it can at least get moving. So what we have here with OGE, well, let's look at the indicators. Well, it's better than falling, so that's okay. And on balance volume. Chaikin money flow, that's pretty good. And price relative to the S&P, well, slight improvement, but let's take a look at something different. Let's edit this, and instead of the S&P, let's take a look at the sector. We'll put XLU in there. So now we have the performance of OGE versus the sector, and as you could guess, it looks pretty bad. All right, but is it coming out of this range? And you can draw trend lines here. Possibly it's breaking out. Possibly if you draw a chart of the ratio, the RSI, let's say, is rising, whereas the ratio itself is still falling. But the point I'm trying to make is that clearly lagging the sector. But in absolute terms, is it coming out of this bottom? And let's see. Let's draw some lines. Segment. You could argue that this is an inverted or inverse or inverted head and shoulders pattern. You can see the shoulder here, head and shoulder here, now challenging the neckline. And if we look even closer, we could see a possible flag pattern as it challenges the neckline. So that's kind of lining up for a breakout. It's kind of similar to a cup with handle type of breakout. I just don't want to equate the two off the bat. It's just that it's the same type of thing where you got a rally into resistance. It pauses, which is the handle, and then it breaks out again. Well, it's got to break out. It hasn't done it yet. Let's take a look at the averages. We have three here, the three biggies. Here's the 200-day in green. It's above that. The 50-day in red, clearly above that, and the average itself is turning slightly higher. And in purple, I think, that's the 20-day average. Just want to see where their averages are with relation to each other. So you have the 20 above the 50, that's a good thing. But those two are below the 200, so that's not a good thing. You want to see a crossover, and I don't mean a golden cross. I just want to see that averages are in proper order for a rally. Price above short average, above long average. So that's getting there. It's better, but not great yet. Let's put in some trend lines. Okay, now the argument is, do we draw it here to meet that high in the middle in August? Or possibly just try to capture all the highs we can? I think this is a better line. So there you have it. I think we have a lot of technicals lined up in its favor. It's in a strong sector. It looks like it's starting to make a move. We'll probably want to wait for a breakout from at least this this small flag pattern here underneath the neckline, because the neckline is a little subjective. You can pick it up, possibly draw it here, possibly draw it there to say it's a breakout, and I can justify that by just looking at the daily closes. So you could say it has broken out. I'd probably want a little bit more, maybe breaking out from this 1 week or week and a half range. But here you have, I think, a stock that is worth looking at. It's not the best stock in the group, but it's in a strong group, and it's just starting to move.